Hello, Namaskar viewers. I am Sanjeev Pandya welcoming you to this week's edition of the Tax Talk with Ajay right here on ITV Gold. Mr. Ajay of SAI CPA Services every week joins us in the show to give us update on the taxes, what has changed, what is required this year when you file your 2023 taxes and what you should know. There are various topics and every week since beginning of January we have been covering a lot of topics to educate you, to guide you about taxes, whether you are just a personal taxpayer or if you have your own business, small business, mid-sized business. You need to know. This show is definitely for you and you need to know as much as possible. And if you still get confused and want to get more information, that's the time you should call SAI CPA Services, a firm located in the state of New Jersey, multiple locations, but they can help you no matter where you are. In-person meetings possible, over the phone, on the Zoom, everything is possible. The trained and experienced CPAs will guide you and navigate you in the right direction to have your taxes done right. You can give them a call at 908-380-6876 or visit saicpaservices.com and let them know. You can talk to Mr. Ajay, let him know that you saw it and heard it right here on ITV Gold. With that note, I'd like to welcome Mr. Ajay Kumar. Sir, good to have you in the show.
Thank you, Sanjeevji. Thank you for the kind introduction.
Sure. All right. Now, continuing, all these important discussion regarding taxes, let's now focus on one thing. One thing in the sense of one thing relates to other 3 or 4 things. But right now, I'm going to start with FBAR. What exactly is FBAR? Foreign Banking Account Regulation, or reporting rather, Foreign Banking Account Reporting, and what you should know about FBAR. Over to AJ.
Absolutely. So today's episode is all about you having the foreign income or a foreigner having the local income. So please stay tuned. FBAR goes with FATCA, Sanjeevji.
Yes.
So either you have the FBAR obligation or you have the 8938 type of obligation. FBAR, as Sanjeevji rightly said, stands for Foreign Bank Account Reporting. If you have more than $10,000 in all the bank accounts combined together in a foreign country,
yes,
you have the FBAR filing obligation. All these requirements fall into FinCEN, Financial Crime Enforcement Network, Section 114. The way you report it, if you had, let's say, $10,000 into a PNB bank, you moved $8,000 into Punjab Sind Bank, then you moved the remaining $7,000 into ICICI Bank. At the end of the year, you are supposed to report the maximum amount that you had in any account. So to the government, you will report 10,000 in PNB, 8,000 in Sind Bank, and 7,000 in ICICI. So in theory, you are reporting 10 plus 8 plus 7, even though it's the same 10,000 moving around.
Yes, absolutely. Good to know. So that's the FBAR. And now let's talk on Form 8938.
Absolutely. I'm glad you reminded me. So FBAR stands for the liquid asset, cash, and all those fixed deposit, CDs. 8938 is mainly used for foreign non-liquid asset. If you had inherited property, if you have a house that you used to live in India, if you have a shop, it's not about income. You can't really say, I have a shop, but there is no rental income. I used to live in that house. My parents live in there now. I'm not collecting any rental income. It's not about having the income or not. Do you have a non-liquid, a fixed asset in India worth more than certain amount? And what's that limit? If you had this foreign asset and all the assets combined together, their value was more than $100,000 at the end of the prior year or more than $150,000 at any given point of time. Let's say if you had a property worth $125,000, then you sold it before the end of the year. You don't have to report it. But reporting is a good idea just because if you keep reporting that property, tomorrow, in few years, when you sell this property, you will have the right to bring this money back in US legally. So reporting this foreign asset, non-liquid asset, goes on Form 8938.
Okay, so that's a Form 8938. So now we just came to know about FBAR and Form 8938, which is of the assets, and mainly the assets, like AJ mentioned, is the real estate or any house that you own. So long as any asset has your name on it, make sure that detail goes on Form 8938 and you fill up, then you fill out that form. Now let's move quickly to form number 3520. There's a form 3520 and what you should need to know about form 3520.
Absolutely. So a lot of us are foreigners, first generation, second generation. We have parents, family in India. 3520 is typically used when we have foreign gifts. When you receive a gift in US from a US person, the gift limit is $17,000 per person to per person. One person can give 17,000 to other person without actually filing any form. Form 709 is typically what we file when we talk about the domestic gift. When we talk about the foreign gift, Sanjeev ji, we typically use form 3520. You don't have this form filing obligation of 3520 if your foreign gift limit per related party to per related party. It's not about per person to per person, meaning if your parents are giving money, will consider your mom and dad as a single party. If your in-laws or your wife's parents are giving, will consider them as a single party. So per related party to per related party, the limit is $100,000 for a foreign gift. If you have a gift more than $100,000, you have form 3520 filing obligation, and this form is typically filed along with your personal tax. The form can be electronically filed. It goes with your form 1040 that you can file electronically with your personal taxes.
All right, so that's a form 3520 for US citizens receiving gifts from their parents or their family members from in India. So that's that one. Now there is a form called 709. Now 709 has to do with if you are in the US and US citizen, and when you give gift to someone outside India, that's when you have to file outside India or US.
Within US.
Within the US.
And the gift limit has to be over certain threshold right now, and it keeps changing. Right now the threshold is 17,000. If you are giving a gift of more than $17,000 to anybody, you are supposed to file form 709.
Correct.
Please remember, the obligation to file form 709 remains on giftor, the person who is giving the gift, not the person who is receiving the gift. The form does not create any tax liability. So typically the question we are asked, if I give $100,000 to somebody, how much tax do I have to pay?
Correct.
Zero. You have the giftor, the person who is giving the gift, has a filing obligation. They have to file form 709. They have to report how much gift they gave, who did they give this gift, but the tax liability is not there.
Okay, but if a person in the US gives a gift to their family members in India, do they have to report it as a gift and the person here have to file 709?
The gift limit over here is 17,000 for
Okay,
a US
17,000,
person
right.
to give money to anybody. So the US person can give $17,000 to foreign mom, foreign dad, meaning one person. The limit that we have is person to person. 3528 is about related parties.
So person can give his father, his or her
His
father 17,000 and mother
17,000, brother
And
17,000,
a spouse
sister
can-
17,000,
right.
the spouse, the children, anybody.
And they must file 709.
Up until 17,000, you don't
need
have
to.
to file 709.
Do they have to file any tax return in India as an
We
income?
don't advise on the Indian taxes, but my understanding is
Yes.
they don't have to report up to this limit
Okay.
on their Indian taxes. It's
Okay.
not supposed to be taxable income for the foreign receiving of the gift person.
Okay, all right. So that's a form 709. All right. So quickly, we're giving you all the information that you need to know, because most likely viewers, you must be, I guess, doing something like this, meaning there's nothing illegal, but FBAR, obviously many of you have an account in the foreign banks, and in this case India. Then also a person is living over there, has an asset here or something like that, that is also possible. And form 3520, yes, parents in India, when they say their children, they have bought a house in the US and they're wealthy enough, they can send $100,000.
It's
So
done all
form
the time.
3520 also comes in effect. And form 709, God forbid that you're wealthy and you are able to give a gift, that's where 709 comes in also. So these are some of the most important tax forms that should not be neglected. It should be filed. Is it must or it's something that you should?
It's a mandatory filing.
It's a mandatory.
When it comes to the US tax laws, there is nothing that you should be doing. A lot of it is you must be doing it, and you want to be doing it only because there is no tax liability around it. Filing 709 does not create a tax liability. Filing 3520 does not create a tax liability. Filing FBAR, filing 8938 does not create any tax liability. Why should you not file it?
That is the one part I think most of the people are confused. They may be scared that if I just file this, right now there is no tax liability, but what if IRS comes back to me a year or two later?
No, see, actually you're doing it right. First, you are following the rule, following the law, and by reporting these assets to the government upfront, in advance, tomorrow if you bring this money back from India to here, you say, remember I told you, I had this money over there, I had this property, this is what I sold, this is the money I got. So nobody can question where is this money coming from.
Interesting. All right, good to know. Viewers, I hope that you have made a note of it. We're going to take a short break. When we come back, we got more information for you coming up in this episode. So stay with us.
Did you know how many people have the foreign bank accounts and how much foreign money is stashed outside this country? Guess what? 1.5 million people, US citizens, US green card holders have foreign bank accounts, and 4 trillion, not billion, $4 trillion are stashed outside this country. That's why it's a serious topic. That's why government is concerned about it. That's why government wants to track, scrutinize foreign transactions when it comes to bank accounts and foreign assets.
That is a very startling, information. Seriously, 1.5 million people having FBAR in foreign accounts. I believe that.
Absolutely.
I buy that. But $4 trillion outside
amazing.
US, and this is what's been reported, huh?
Absolutely. You're 100% right.
There may be a huge number, perhaps not reported in FBAR or outside.
This number probably is on the lower side.
Oh, wow, unbelievable, man. Yeah, US. No wonder people love to come to US and live here and take money out of US. All right, let's continue our conversation. Now we're going to go to form number 5471. What is a form number 5471? It has to do with a US citizen not living in US but working outside US. Is that what it is?
Well, 5471 does not require you to be living here or there. 5471 is mainly when US citizens, US residents, green card holders, citizens or 1040 filer have interest in foreign company accounts. If you own more than 10%, a lot of people had companies outside US and then they came here, or they have certain partnerships, certain equity in their parents' company. In those cases, if you own more than 10% of any company outside this country, you have an obligation to report those transactions, and those transactions are reported on form 5471. Please remember, 5471 needs to be filed for each such situation. If you have ownership in 3 different companies, you are going to have 3 different form 5471. Again, this whole episode, when we talk about FBAR, FATCA, earlier we were talking about 3520, 709 filing, 5471, 5475, 72. All these forms does not create a tax obligation. This is information filing.
Yes.
So when you file 5471, unless you are drawing the money, unless you have an income, this is just an information reporting filing obligation that you have.
Got you. What's the F income related to this form 5471?
Well, it's possible that not only you own this foreign company, you are collecting some money, some dividend from that company.
Oh, I see.
In that case, you have foreign income. In that case, you may have some tax obligation. But a lot of times, people are not collecting money. It's just their parents' company, or they had some interest. In those cases, 5471 is more of a reporting obligation that you have.
Okay, just for reporting obligation, no tax liability. All right, now let's go to form number 5472.
Absolutely. So if you flip the equation, 5471 is for US people owning the foreign companies. If you flip the equation, 5472 is for foreign people owning the US company. 5472 is a mandatory requirement. Even if you had no transaction, you are filing the taxes, you need to file 5472. 5471, 5472 have a minimum penalty of $25,000 per incident. So please remember, there is no tax obligation. It does not create the tax liability. So make sure you file 5471, 5472, especially if you have foreign exposure. When you have foreign income, foreign asset, foreign companies, or the other way around, foreign people having the US asset, US real estate, US companies, you have to be very concerned about all these 709, 3520, FBAR, FATCA, 8938, 5471, and 5472.
The way you mention all these phone numbers, it reminds me. Do you remember all your family members' phone numbers?
You're right. There was a time when I used to remember everyone's phone number. Now with the smartphone, the phones are getting smarter, and I think I'm getting dumber.
And you're not even remembering your own phone number, perhaps.
A lot of times that's the case.
This is amazing the way you mention phone numbers. But anyway, a question related to this form number 5472. How can we determine the proportion of foreign ownership in a company?
Well, when you started the business, you know who the owners are.
Yes.
As a part of the filing requirement, you are supposed to report who the foreign owners are. For each foreign owner, you will report 15472. So in a lot of cases, it's not just one owner. You have multiple foreign owners in the US company. In that case, you have a 5472 for each such party.
Okay, so when you register a company, then you mention the owners, and that's how the
absolutely.
The proportion.
And when you file the taxes, you're supposed to report who is going to get the benefit.
Yes.
Who owns how much percentage of each company. The equity percentage has to be reported along with the income tax filing. And based on that equity percentage, each person, each foreign owner will have to report 5470.
That reminds me of a question. A couple of weeks ago, we did an episode, and this is one of the changes in the tax laws for starting from the year 2023. You had mentioned that if there are more than 2-3 owners in a company, right, they would have to file certain form.
Well, no, that was about BOI, beneficial ownership information.
Correct.
That's a separate requirement. Just started last month. It started from January 1st, 2024, and there are 3 different type of filing dates. If you started the business prior to January 1st, 2024, meaning as of January 1st, 2024, when the requirement started, if you already had the business, you have 365 days to report to file BOI. If you start the business now, meaning after the filing started, after January 1st, 2024, you get 90 days to do BOI filing. If you make any changes to the business, including but not limited to address, DBA, percentage of ownership, purpose of the business, any change that you make to the business, you need to do an updated BOI filing within 30 days. So that episode was more about a local BOI filing as opposed to 5471.
It just came to my mind, so I just wanted to have it. Anyway, viewers, you may find this information handy. BOI stands for, by the way, Beneficiary Ownership Information.
Absolutely.
That's what it stands for. Now, okay. Now, let's go to form number 1116.
Absolutely. So 1116 is when you have foreign income. So far with 5472, 5471, FBAR, FATCA, 3520, 709, we have been talking about foreign asset, foreign gifts that did not create any tax liability. The next 2 things that we are going to be talking about is actually having foreign income and paying the taxes. So 1116 is used to claim the tax credit for the taxes that you pay to a foreign country. Let's say if you make $100 in India and you paid $10 in TDS, then when you include this $100 in your US income and we say, well, you owe $15, then you can say, well, you know, I paid $10 over there. So based on your pro rata percentage of income, we'll see how much your foreign income is compared to your total income and how much your total tax liability is. Will give you the pro rata percentage. This is the tax liability. Up to the taxes that you pay to the foreign government will give you the credit. So maximum credit in this example is $10. So if you owe $15, will give you maximum $10 credit because that's what you pay to the foreign country. You still owe us $5. If the pro rata percentage turns out to be $7, we'll give you the credit for $7. And the $3 you carry forward. So 1116 in short is used to claim the tax credit for the foreign taxes. You had foreign income, you paid some taxes over there to the foreign government when you filed the taxes in India. You have the right to claim those taxes as tax credit or certain portion of it depending on your tax situation when you file your US taxes.
Isn't this similar to to US if you are living in one state and working in another state?
Very, very similar to that, except when you are living in one state and filing, having income from other state. So take an example, a lot of people in New Jersey works in New York, live in New Jersey. Some states try to compute the tax on global income. Some states will compute the tax on the local income. So there are states which will say, you made $50 in my state, so pay me tax on $50. There are some states like New Jersey that will say, your total gross income is this much. This much income comes from outside, so we'll give you a tax credit. This is how the New Jersey does it. So it's very, very similar. This 1116, the way we handle it, very, very similar to how New Jersey handles the state taxes.
See how I related the things?
Absolutely.
Because after I heard you, then I realized that between the states, that's how it
100%.
works. And I'm sure it works. New York, New Jersey is an example, but perhaps it's same in all the other states here.
Many other states works on a global income basis.
Yes. All right, sir. With that note, we come to the end of the show. We need a quote from you, Mr. Ajay.
So today's quote is a bit sad. When it comes to foreign income and foreign aids, my theory is the foreign aid goes from poor people in the rich countries to the rich people in the poor countries. The foreign aid does not go to the right people. When we have India, Bangladesh, Ukraine asking for foreign aid from countries like US, a lot of poor people in US will have to suffer. Will not get the right benefit.
They are suffering.
So in fact, the aid is going from the poor people in the rich country to the rich people in the poor country.
Yes, absolutely.
Think about it.
The kids are here suffering, the hundreds of millions of dollars going into aid. That means, children here are hungry, people are here homeless and jobless, and they don't get benefits, but the money goes overseas.
The worst part is this money going really to the people
who should be going? Between there, I'm telling you, and I let everybody know, the guys in the middle, the high, position guys, they really get chunk out of it, and they make their living handsomely. But that's a sad fact, and U.S. government will never accept it, and they'll continue to do so. And we're experiencing that, Ukraine, Russia, and then Israel and Palestine. So that goes on. Anyway, folks, with that note, we come to an end of this week's The Tax Talk right here with Ajay on ITV. Ajay, thank you so very much for your time.
Of course.
I know you are in the middle of tax season, so I wish you well, and hope to see you next week right here, same place, same time. I am Sanjeev Pandya, wishing you all happy and tax-free days ahead. If you have filed your tax return, put a smile on your face. All right, until we meet again, take care of yourself. So long.
Thank you.